Boeing shares tumbling today, closing near session lows. The plane maker's CFO warning that could burn through another $4 billion in cash this quarter and would be cash flow negative for the full year. Just a month ago, the company expected to have generated cash in fiscal 2024. The stock is down 34% this year, but one analyst still sees opportunity in this name. Nicolas Owens follows Boeing from Morningstar. He's got an overweight rating on the stock. Nicolas, great to have you with us. What do you see in this stock? I feel like it's been a series of disappointments, and just the very latest is not making the guidance that it just gave a month ago, 2 months ago now.
Yeah, that's, well, is it too soon to make the Charlie Brown and the football analogy? The big news today, I think, actually, in terms of what's hitting cash flows for Q2 and the plan, was actually the China deliveries. So the idea was that even as they're slowing down assembly, they could be delivering these other planes that are now 99% done, and that would boost the cash flow. But so if you push out those China deliveries till sometime later in the year, hopefully, presumably, it exposes just how slow they're taking their ramp up on the 737 assembly line, which is the healthy, right thing to do, but it doesn't line up to the expectations for Q2.
All right. So how do you get to 221? How do you get to your buy rating at this point in time?
Sure. So, I mean, from the point of view of the long term, so in 3 and 5 years, I think it's plausible that Boeing will have its assembly line squared away. The supply chain will be stabilized. They'll be producing many more of these 737s and doing so profitably. I still think that is the dominant and most plausible scenario. And 737 is about half the value of the whole franchise. So way back in February, after the January 5th thing, I took a look at some of the scenarios and the timing of the deliveries of 737s, and I took what I thought was a conservative take, and we shaved our fair value at the time, which gets us to this 221. The real point is there's just still a ton of demand for these planes long term. I'm using a discounted cash flow model. I'm not necessarily benchmarking next quarter's earnings or multiplying from there. So that's part of how we get there. That's really the bottom line.
There are, though, a couple of near-term sort of deadline or dates that investors are going to be watching very closely, and I imagine you are too. The May 30th deadline to file that 90-day report on quality improvements, and then also July 7th, which is the deadline by which the DOJ has to decide whether it will prosecute Boeing for violations of the deferred prosecution agreement. How do you handicap? How do you think about those two events in the context of the stock?
Yeah, certainly looking forward to the FAA conversation next week. I'm hopeful that that's relatively positive. I mean, the CFO mentioned that they'd been in dialogue, and really all they're doing is delivering their plan, which they will then garner feedback on and move forward with. And I think they're learning as they go here, as they really are digging deep into what's going on in the assembly line for the 737. The DOJ is a bit more of a wild card. If they were found criminally liable, actually, that could present pretty big complications. Usually, these sorts of things end up turning into just large fines. And, basically with, I think it's 500 million shares outstanding, $1 billion is 50 cents off the value of the company in terms of fines. That